Hey guys, on this quick video, I want to talk about some of the concerns I have over Silicon Valley Bank and the Signature Bank of New York and what these executives and maybe the bank presidents and CEOs, what did they know about what was happening? On this video, I want to go over some of the more disturbing facts about these bank closures and what happened. And when I talk about it, may make you angry a little bit because it sort of roused me up a little bit because I know good and well that there were some things going on behind the scenes that was a little bit shady, and I want to talk about them on this video. So just so we're clear about what happened, right? Silicon Valley Bank in particular, their bank was primarily with young startups, brand new businesses, lots of venture capitalists. It was the 16th largest bank in America, and they had lots of assets under management, supposedly, right? And a lot of tech-centric companies were their customers, as well as venture capitalists who would invest in these tech companies. And their customers over the last year or more have needed more and more cash as tech stocks have dropped lower and lower. You know, if the federal funds rate has increased, and when that increase happens, it has a large effect on the stock market. And so we've seen specifically the tech sector, tech companies losing value in terms of the stock market. And that's been happening a lot. And now these companies that did a lot of business at Silicon Valley Bank, they needed their money right now for various reasons. And this led them to withdraw money from the bank. Now, meanwhile, Silicon Valley Bank needed to keep selling its assets in order to keep up with the withdrawal demands from their customers. Now, I want to point this out to you guys. Silicon Valley Bank and Signature Bank of New York, they did what a lot of banks do, which is when they get deposits in, they go and invest that money so that money can possibly grow, right? But the problem, especially with Silicon Valley Bank, is that they were highly leveraged into bonds, and they had to keep trying to sell these bonds at a loss to free up capital that they could use to satisfy the demands of the withdrawals of their customers, right? And the banks got to a point where they could not keep up with the amount of withdrawals. They didn't have enough assets that they could sell off to keep up with it. And so they couldn't guarantee customers access to their funds. And that ultimately, with a little bit of fear thrown in there, it caused big concern. And then you had a massive run on the banks where everybody was trying to get their money out at one time. And neither one of those banks had the assets they could sell to keep up with having to have the funds that customers needed. Now, that's sort of the background, right? But here's the kicker. Here's the problem and the issues that I had with the whole thing. The first thing is that the CEO, the CMO, and the CFO of Silicon Valley Bank, they sold shares of their stock just a couple of months ago. They started selling shares of their stock in their bank, in Silicon Valley Bank. They started selling off shares. Now, why would they start selling off shares? I know people sell shares all the time, but the timing of when they started selling these shares looks very, very suspicious. The CEO of Silicon Valley Bank sold off $3.5 million worth of stocks just 2 months ago, right? Prior to the fall of the bank, 2 months prior, sold off a bunch of stock. That looks a little suspicious. It feels like and seems like sort of like insider trading. I know it's not insider trading, but it seems like there might be something going on where they had information and they used it to profit from it. I think in the stock market world, they call it a front running or something like that, making moves with insider information, right? Now, in my opinion, that needs a deeper investigation, and I'm sure there's probably going to be one to come. There's an SEC rule, 10B-5, that prohibits corporate officers and directors or any inside employees from using confidential corporate information to reap any profits or to avoid a loss. Now, in my opinion, they were trying to avoid a loss because they knew something was coming and something was wrong with what they were seeing. And so you're not supposed to do that, according to the SEC, and use that information to trade stock. And so that seems a little fishy to me. Now, that just tells me that both of the bank's higher ups, the executives, CEOs, CFOs, etc., they knew something was coming and they knew it. And that's why they began selling off stocks. But They didn't say nothing to anybody. They didn't say nothing to shareholders. They didn't say anything to customers, didn't say anything to workers and employees. Everyone was in the dark except these few top executives that knew what was going on. Now, if you look at the resume of some of the highest executives at these two banks, I mean, these people are very, very smart, wise, experienced, been in the game a long, long time. I mean, think about the CEO. I think his name is Greg Becker, CEO of Silicon Valley Bank. Lots of experience, right? The CFO was Daniel Beck. Lots of experience. And even the chief marketing officer, Michelle Draper, she spent 20 plus years at Charles Schwab, right? These people knew their stuff. And then if you go over to the Signature Bank of New York, their CEO, Joseph DePaulo, or I'm not sure if I'm pronouncing that name right. But this guy had been the president, CEO of the bank since the beginning of the bank, since the bank started. And he spent a lot of years at the Republic National Bank of New York, or just like the COO at Signature Bank of New York. The COO was named Eric Howell. Now, Eric Howell, he spent a lot of years at the Republic National Bank of New York as well. So when you go down the list of the executives, the list of the professionals, the high up executives at both of these banks, these people were very, very, very experienced. These were people that were around in 2008, in 2009, the crash we had back then. They were around for that. A lot of them had been doing banking for 20, 30 years. They knew their stuff, and they are very, very accomplished people. So that's fishy to me. Now, right now, today, there's been 2 lawsuits that have come up already, right? The 3 top executives at the Signature Bank of New York are being sued, and also a class action lawsuit has been filed against the Silicon Valley Bank. Now, people are claiming that these people knew more than what they're letting on to. The class action lawsuit and the lawsuit against the 3 top executives, people are saying, hey, this is not right. Something went wrong and something was going on, and they didn't let anybody know, didn't say anything to anybody, and perhaps participating in trying to avoid a loss, getting rid of stock, or to profit from, which is a violation of SEC rules. So it's not just me, right? Everybody else is thinking the same thing about the elephant in the room. What did you know? Why didn't you say anything? What is proper protocol? What is legal and not legal? And I also find it a little weird that Silicon Valley Bank is reported to have provided all of their workers and executives bonuses on the morning before they closed and were taken over by the FDIC. They gave out bonuses and they closed they closed right then. And it's like, why would you be giving out bonuses? And it's like, that's kind of a weird thing to do, right? But the other thing about Silicon Valley Bank is that they didn't even have a chief risk officer for most of 2022. I think they got rid of their chief risk officer back in April of 2022, and they just hired another one in February of 2023 or January. Last year in 2022, we were having the largest inflation in 40 years. And we had rates going up from a federal funds rate of near 0% to plus 400 basis points is how much the federal funds rate went up in 2022. During this tumultuous economic time, you have the 16th largest bank in America who doesn't have a chief risk officer. And at the same time, they have a risk committee, and the risk committee met twice as much in 2022, but they still could not find a way to put a chief risk officer in place. So that's another red flag. Why not have a chief risk officer there in place to manage what's going on and manage some of the over leveraging that you guys were seeing? So another red flag. The CEO of Silicon Valley Bank last year brought in $9.9 million. That was his salary. And his bonus was $1.5 million. So the bank is over leveraged. The bank is going down. The bank's, 6 months from a collapse, and he's bringing in a salary of almost $10 million. And the CEO over at Signature Bank of New York was about $8.6 million last year. Tons of money, right? Making lots of money, but making lots of mistakes as well. All these things point to problems. They point to mismanagement. But when you go to their websites, you see where all of the top executives were receiving accolades and receiving awards. all the while the bank was going down, right? I mean, perhaps they were too busy looking the part and collecting these awards and padding their resume and their bios when they should have been focused more on what do our assets look like, and are we over leveraged in long-term bonds, and maybe we need to shift and do a pivot, and maybe even at Silicon Valley Bank hire a chief risk officer to manage some of the potential risks that we saw. There may be some other banks that see the fate of these two banks. Don't be surprised if you see other banks, large banks, that may end up being insolvent like these two banks, because other banks do what these banks have done. It's just that some of the banks are a little better at managing some of this risk than these two banks have been. But like I said, it's easy to cover everything up behind the scenes when everyone is winning awards and making their bios stand out and elevate themselves on their website, right? It looks really good, but let's take care of business, because you got people's money that you're managing, and that's really important. And so for you guys, I say, hey, it's always better to look deep within a company or deep within a bank, right? So you know what's going on. And I also want to tell you, there's a few databases out there that you can search to see, okay, what is my bank actually investing in? Are they investing in mortgage-backed securities? Are they investing in long-term bonds and US Treasuries? What is my bank investing in? You can actually go and look. There's a few databases. One database, or at least one website, I'd like to throw out there for you guys, is the Consumer Financial Protection Bureau. Now, that's a website that I recommend you guys go to and thumb around and see if you can find some information about your bank, know your bank's routing number, and perhaps they might want that on the site. But do a Google search so you can find out specifically what is your bank investing in. Or you can go to your bank and ask them for some type of summary of their investments and see what they say, right? But you, as a person who puts money in the bank, you have a right to know some of those things. So on this video, guys, I just want to point out some of the inconsistencies and some of the problems that I saw and see with these two banks. And I think there's going to be some other banks that are going to face the same situation, because as interest rates continue to go up, which I think the Fed is going to meet here in a couple of days, but I don't think the interest rates are going to go up. I think they're going to freeze that and probably not raise interest rates. If anything, they'll only go up maybe a quarter of a percentage point, 25 basis points. But because of all this happening with these banks, I don't see the Federal Reserve doing a large interest rate hike. That's just going to cause more panic and more problems in our economic system right now. And right now, the one thing they're trying to do is make sure nobody is panicking. Because if everybody starts to panic, there could be a run on 20 or 30 or 50 banks or 100 banks, and that would be a huge problem. So I just want to share that information with you guys as things develop and change in this situation. I'll be back here right at this mic explaining to you guys what's taking place. No need to panic right now, but just be aware of what's going on. Hey guys, the best person to take care of the old you is the young you. Do me a favor, take care of yourself, guys, and always take care of other people. Until the next video, peace.